Channel viewers, and with me now I have Chantal Marx. She's from F&B Wealth and Investments, just to break down what's been happening on local and global markets. Thanks very much for joining us, Chantal.
Oh, it's certainly a pleasure.
Good stuff. So today is seemingly a risk-on day, people seeming to be taking bets on the local and international market. What's the reason?
So it is absolutely to do with President Trump and the EU kind of agreeing a way forward in terms of trade. We know that the US has been on a rampage in terms of protectionist policy around trade, particularly against China, but to a lesser extent towards the EU as well. And markets are just relieved that they're willing to talk about it again.
Does this give us a signal about the United States' intention with China, perhaps? Because for a long time people have been thinking that it's all been bravado, you know, all these threats around imposing more tariffs on China. Or is China really the one that they're after?
So it seems as if China really is the one that they're after. I mean, they run the biggest trade deficit with China, so that's their particular focus. Also, from a diplomatic and political perspective, the Trump administration has been a lot more negative towards the Chinese influence on global markets and global trade, rather than the EU, for example. I think the EU is also negotiating a little bit on the back foot because they're losing the UK in just a few months' time, and trade agreements are of vital importance for the vibrance of that economy. The Chinese might feel that they're in a stronger position to negotiate and take a harder line.
Of course, we've got the BRICS summit that's happening right now. Anything exciting for you as a market observer?
Yeah, I mean, the BRICS summit, I think, has lost a little bit of its shine over the years because there's been a lot of talk, but not really a lot of action. Certainly this year, I think the highlight for South Africa has been the fact that the Chinese are willing to invest further in the South African economy. And one of the biggest market-moving events has been the Chinese bank's commitment to fund Eskom, which we know is a little bit of an eyesore for government finances. So the fact that Eskom is looking in better nick because of Chinese involvement is perhaps the best thing that's come out of it so far.
And then, of course, here at home, we've had our Finance Minister, Nhlanhla, announce through the Treasury that an investigation will be made into, the PIC, the Public Investment Corporation. There have been a lot of shenanigans, alleged shenanigans there. What confidence does that give to people like yourselves who are obviously invested in the market? And, of course, the PIC is a big investor in our equities market.
Yes, I mean, we want the PIC to be as stable as possible, because if your investor base is stable, then your markets are a little bit more predictable. And that's really good for us who actually have to make these decisions on a daily basis. Confidence in the PIC is also important from a consumer perspective, because we know that a lot of our South African consumers are government employees. The PIC manages the government employee pension fund. So whenever there is unrest or uncertainty in the PIC, it's bad for markets. We also want to know that the PIC is going to be responsible with their investments. And any kind of boardroom shenanigans takes away from our comfort around the entity. And we want to love the PIC. We want the PIC to be in a good position. Okay.
And then let's take a look at a couple of stocks. So while we have time, I see Nedbank, they came out with a trading update that will be in relation to the 6 months ended June. They expect that their headline earnings per share, their profits will be up anything between 23 and 28%. I thought the financial sector was having a hard time. This looks pretty good.
Yeah, I mean, so we'll have to look at the full print in order to see how the South African part of that business did. But from what management have guided, the big drive in earnings has actually been outside of South Africa. So a few years ago, they acquired a bank called EcoBank. It operates mostly out of West Africa, and it was loss-making. So they took a loss-making entity onto their books. They've managed to turn that operation around, and it's actually printing profits now. And that has given Nedbank a really nice upswing to earnings, which other South African banks might not have.
And then Anglo American, they've come out with their results. We did see that their subsidiaries, Kumba and Anglo American Platinum, they came out with quite good results and gave very handsome dividends. So what's happening with the Anglo stable?
Yeah, I mean, so Anglo American headline earnings per share missed the mark a little bit. But if you look at the underlyings, as you rightly mentioned, Kumba Iron Ore and Anglo American Platinum did exceptionally well. And while Kumba Iron Ore paid a really handsome dividend, their earnings actually declined by 35%, which weighed on the earnings profile of Anglo American. They've had some serious issues with Transnet in terms of exporting their product, which has weighed on their revenue growth. And then for Anglo American, I think it was a reasonable result. Investors might have wanted more in terms of the dividend because they got a good dividend from Amplats, they got a good dividend from Kumba Iron Ore, and I think perhaps the market was even looking for a special dividend, but management opting to rather pay down debt and invest again. So that's quite important because it seems as if the mining capex cycle is returning. Anglo American pulling the trigger on a copper mine in Peru.
And then lastly, Chantal, before you go, what's your feeling about the way that the market's been going? Because it's been extremely up and down. What's your confidence levels about people getting a return on the local market this year?
Well, I mean, it's been three years of absolutely flat returns. So we'd really want a good return for investors this year. It all depends on the global setting at this point in time. So we've got the tail risk of the trade war that could have an influence because it could dampen near-term returns. And then it all depends on the global growth profile and what central banks globally are going to do. If global growth is going to slow down, it's going to be really bad for the South African market and for markets generally. So hopefully we can still see solid growth out of the US, monetary policy still being applied very, very carefully. And if we can still get reasonable global growth for this year and next year, and we might see a positive return.
Fingers crossed. Thank you so much, Chantal. That was Chantal Marx. She's from FNB Wealth and Investments. More news for you after a short